Go Cubbies! Oh boy, that was one heck of a World Series there, I'll tell you folks. And it was an unbelievable Game 7. Had to go to extra innings, a little rainstorm before they went to the 10th inning, and came right down to the wire. This was one fabulous World Series, one of the best I think in decades. Well played, and came down right to the end. Again, congratulations Cubbies, and also to Cleveland for hosting their part of the World Series in such a nice, fashionable way. Hey, let's take a look at the market today. Down again. Here we go. SPY down 0.4. The Dow was only down 0.13. The Q's down almost 1 full percent. Small caps down about 0.5%. But look at Bank. Bank, it is a little kink in the armor here. It's not quite as bearish when it's up 0.32. Then the VIX, though, the VIX continues to climb here. And we're going to do a little quick lesson here on the VIX in a moment. And we're going to have gold and silver here. Now gold continued to go up. Silver's taking a little rest there. And then we've got oil down another 1.9%. It just keeps on falling, folks. We've got the market falling. We got oil falling. And then we got the dollar continuing to fall about another 0.3% again today. The trend did finish in a mild bullish area, and the trend trade is not on again today. All right, let's do a quick lesson here on the VIX, the VIX. So let's talk about the VIX. Here is the weekly chart on the VIX, but more importantly, what is the VIX and how we're going to use it? What is the VIX? It is the Chicago Board of Options Exchange Volatility Index, and they track what traders are buying. They're buying calls or they're buying puts. Calls are options where you make money when the market goes up. Puts are where you make money when the market goes down. So it's a ratio of those two. Now, the majority of the time traders are buying calls, just like a majority of people are buying a stock going long versus shorting a stock going short. So, but it's a normal percentage of how many are buying calls versus puts. But when people believe the market is going to be going down, they start to buy more puts out of the ordinary as far as the ratio between the two. And that's when the VIX, the volatility index, starts to go up. Now, who would be doing that? Well, most of the institutions, the 401ks, the pension funds, all those folks out there, the mutual funds, they can only be long. They can only buy stocks. They cannot short stocks. So if they believe that the market is headed down, what can they do? They can buy a put, because it's not being short. They can buy a put and make money when the market goes down to counteract the losses they would have, because they have to hold only on the long side. So that's what the volatility index is. And there's certain limits. Now we look at this weekly chart here, and you can see that when it's above 20, that's really screaming volatility. The fear is very, very high in the markets. If it gets down here below 20, this is more the normal range. And as you can see, going back on this weekly chart, we screamed up above it here in September, and then we were back down below the 20 line for a while. Then at the first of the year, we went up above, but then we've been down below it, and just one little bump up there in July. And then look at this. We've been down here. This is called complacency. Very, very complacent, where hardly anybody is worried about the market crashing. They're not buying puts at all, and they can be very complacent. Now, also notice that if this does scream up here above the 20 moving average, like this one went all the way up here in the 50s, and then right back down all in the same week, it tends to snap back pretty quickly. But at the time when the market is falling, it can fall pretty quickly. So that's just a quick lesson on the VIX and how to use it. So right now, where are we on the VIX? Let's take a look at the daily chart on the VIX. And here is that daily chart. And look at this. We were down here at 13, and then 1, 2, 3, 4, 5, 6, 7, 8 days. Boom, boom, boom. And look what happened today. Up to 22. We rocketed up above 22 now. Actually, this is updated since I just did the numbers. The VIX is up 14.9% today. This just updated since I started this recording. So, folks, that is pretty darn severe. Let's go back to the S&P, and you can see here we got 1, 2, 3, 4, 5, 6, 7, 8 down days in a row. We haven't had 8 consecutive days down in the S&P 500 since 2008. Oh boy. And then we've got the Dow here. It's down. It's only down 5 days in a row only. And then we've got the Q's down 7 days down in a row on that one. And then we've got the small cap Russell. We have 1, 2, 3, 4, 5, 6. We have 6 out of 7 days down. Wow. So we are definitely in a down leg and in a down trend right now. Hopefully you have your stops in any long positions you're in, or you've got your short positions on at this point, and you're just smiling every day as the market falls. Hey, just one quick one from our Stock Picks V newsletter. This one we made a call on. It was in a symmetrical triangle here, and then 2 weeks ago it actually triggered here. This is on Fossil, Fosl, and earnings was tonight right after market, and this is where it closed. Right now it is trading at 22.20. That's right, 22.20, all the way down here after earnings. So those who had this all set up ready to go, here was our recommended entry, would have been in on that day, and if they were still in it, bam. So it's had been a nice trade so far. So that's just out of our Stock Picks V newsletter. This is Mark the Meerkat. Hey, just remember, always use a stop because we have to protect our ass. That's trade well.